Every market cycle, including crypto, has 4 phases: the slow accumulation, the run-up phase or the bull market, the plateau or distribution phase, and the run-down phase or the bear market. This pattern can be found in all markets, and it's only natural. But many in the crypto industry tend to forget or want to forget about it, which is why they are shocked when the price drops in the final phase. While a cycle ends, a new one begins, so we shouldn't beat ourselves up so much when the cycle is entering its final stage. This is why understanding and accepting the existence of cycles can help one maximize their returns and minimize their losses. The first phase, the accumulation one, comes after a decline as buyers begin to take control of the market. They are often people with good information or insiders. Traders with experience will also pick up the signs early. Of course, bargain hunters are also likely to join during this phase. The second phase is the markup, and it's where the bull market begins, meaning that prices are rising or they're just about to. This phase has demand surpassing supply, and increasing prices are making the news around the world. As prices increase, new people become interested in the asset, emotions are positive naturally, and finish in a euphoric feeling at the top. This is also influenced by the fear of missing out as long as the price run continues, and why not, even greed. The third phase is a distribution one. Increased volatility often shapes the top of a markup and the transition into a distribution phase. News coverage is at an all-time high, but greed and fear start to take over. Participants with experience are making profits, but buyers begin to bid lower and lower as they start to be suspicious how long the rally could continue. When technical indicators signal a market top, sellers become increasingly aggressive, which will send the price downwards. Downwards price pressure intensifies and the markdown starts taking shape. The fourth phase, the markdown, is characterized by a certain percentage of panic selling. Negative emotions run strong, such as anxiety, capitulation, and anger, since the price goes towards a low point. It is as if the markup phase is seen in a mirror, but with negative emotions instead of positive ones. In the end, the market begins to stabilize itself, and a new cycle begins as people start to accumulate again. Some theorize that the crypto market won't follow these cycles in the near future, with others claiming that the change has already begun. Since institutional investors are now part of the industry and the market is maturing, the cycles could become less defined than before. What do you think? Are you following the cycles? Drop some comments below. A bull market indicates a market in which prices are rising or are predicted to rise. The term was used initially for the stock market, but it is now common for bonds, commodities, and crypto. Since the price rises and falls constantly during trading, the term bull market is used to refer to a longer period of time in which the price of crypto is increasing. A bull market can last several months, or in the case of other assets, even years. There are several indicators for an approaching bull market, such as the MVRV-Z score. This is used to assess when an asset is overvalued or undervalued relative to its fair value, as underlined by the deviation between its market cap and realized cap. When market value is significantly higher than realized value, it has historically indicated a market top or red zone, while the opposite has indicated market bottoms or green zone. The Mayer multiple is another technical indicator that showcases if Bitcoin is overbought, oversold, or fairly priced. The NVT signal is also used as it takes the total value of the Bitcoin network, aka the market cap, and divides it by the 90-day moving average of daily transaction value. A bear market is when a market experiences a decline of its prices for a long period of time, with the overall investor sentiment being pessimistic. It can often be triggered by a downturn of the economy, such as a recession, which makes it the opposite of a bull market. There are several factors you could look at in order to see if we are approaching a bear market. One of them is a depleting Bitcoin trading volume. If there is a discrepancy between volume and price, that usually signals that fresh capital entering the market is drying up and buying momentum is waning. Another factor worth checking out is the weekly relative strength index, a leading momentum indicator that shows when an asset is overbought, so it will probably rise by calculating the average gains and losses over a 14-day period. Furthermore, March has consistently been the worst performing month for Bitcoin, with a mean average loss of 14.725% since 2017 when the market began gaining traction. The second worst month, on average, is September, with a mean loss of 9.05% across a similar time frame. Speaking of loss, we wouldn't want to lose you. Would you mind subscribing to our channel if you liked what you heard so far? Thank you. Taking a look at the previous cycles, we can see that the first Bitcoin cycle peaked on the 29th of November 2013 at 1,129. The bears invaded soon. The next cycle peaked on 16th of December 2017 at $19,641, and later the market became bearish. The most recent cycle seems to have peaked on the 10th of November 2021 at $69,000. But many argue that, despite a big fall in the overall price of Bitcoin, and indeed of the crypto market in general, we have yet to enter a bear market. While market cycles don't necessarily have a certain length, it seems Bitcoin, and largely the crypto market, experiences these cycles every 4 years. Of course, a cycle can be identified easier on a higher frame, but it is also possible for a cycle to be made out of several cycles that play out over smaller cycles, and can be noticed only on smaller time frames. One such example can be the bull market for Bitcoin that ended at around $20,000 in late 2017. Bitcoin accumulated for close to 2 years, starting with 2015 around the when the previous markdown was ending. 2017 saw the beginning of important price appreciation, which pushed the parabolic markup to the top. Bitcoin moved up and down between $15,000 and $19,000, followed by a prolonged markdown that lasted all the way until 2019. If you were an investor back then, I bet you remember that all phases were followed by the emotions typical for such a cycle. The first cycle, the one that peaked in 2014, saw the biggest relative gains for investors. As a trader or investor, it is highly important for you to understand that the crypto market up until now has moved in cycles. Such cycles can offer an important macro perspective, which means before you decide to trade, you can be informed quite well about everything that is happening, has happened, and will happen. Just keep in mind that looking at all industries, every time the price went down, it finally went up again also, so it is important not to get scared at what is only natural. If you liked today's video and you have any other questions about the bear market or bull market, don't be shy. Go ahead and ask them in the comments section below. See you soon. Take care.
All right, so we're going to jump into this. As the thumbnail, you saw the thumbnail. You probably wonder what the heck is up with that. I heard in the past this talk about, 100,000 Bitcoin. I heard that one, what was it, 90 days for $1 million. I'm not on board with some of these things. My thing is there has to be something solid. Shout out to Michael Cornwell. He's probably real busy tonight, but if he's here, he's mentioned numerous times, numbers don't have emotions. At the end of the day, I look at actual data, other metrics, to be that guy, whether it's a popular thing to say or not, this bull run thesis. And I've been basically stating it since, I don't know, late January. I did, Dies even last year saying, hey, these 4-year cycles, should we pay attention to it? Shout out to even Edward Vincent. He was a guest on the show at one particular point when we were doing the 4-year cycle thing and paying attention to that. So let's jump into this, and basically to start things off, there's this whole idea of, Bitcoin to 180,000. Yeah, it's a new thing. It says, for instance, after several consecutive weeks of significant gains, cryptos, finally took a breather the last few weeks. It's been a kind of a weird situation, right? So we're going to jump into this, and we have, charts. We have a few key things. You got to see what's going on with the economy, all that stuff, right? So I'm going to start off with this, and on this one particular one, I'm trying to, zoom in a little bit more for you guys. So like you see right here, after several consecutive weeks of significant gains, cryptos finally took a breather or so, last week and whatnot. A good example basically is like what you see. Bitcoin dropped 7% or so the past week. We saw it fluctuate. We even saw it, for instance, go to, I think we hit close to 31 or right at 31 just briefly. I don't know, 31K. Ethereum, shed 90%. Solana, if that's your thing, Polygon, we saw Polygon drop back into under $1. Was in, the 90 cent range. Even XRP, right? We saw some fluctuation with that. Polkadot, their layer 0, all of them basically dropped more than 10%. And some people were kind of going back to the whole thing like, this whole thing is a fake out. I knew it, Bitcoin to 12K, you start hearing people talk about that kind of stuff again, right? And rightfully so. There's nothing wrong with, difference of opinions and so on. But at the end of the day, there's one narrative and then there's actual data to support the bull run thesis. What is that all about, right? So with that said, if you're just tuning in, smash that like if you haven't done so already. We're going to talk about this bull run thesis. This is basically like part 7 in regards to just that, or maybe part 8. I don't know. I have to double check on that. So it says, we view the drop. You got to keep in mind, this is from a premium service I have. They pay annually for, which is Investor Place. I'm telling you flat out, these guys have been like 90% spot on with all of this. My Filecoin, for instance, you guys know 3K in 3 days. They've had some other great choices that I've shared with the community as well. The graph, right? I bought bottom at 6 cents. Audio, right? I have no complaints, basically. So it says, we view the drop as a buying opportunity and think current levels offer a particularly attractive short-term entry point. Now, you got to keep in mind what's going on with the market as we speak. You do see a lot of things going on with these short-term entry points. And people, even at these particular price levels for BTC and so on, are snatching some of this up, even ETH, right? Even though it's not technically bottom anymore, right? So it says cryptos are in the midst of their 4th boom cycle. We've been talking about this. If you're not a new, if you're a newcomer, you haven't been around for this, but we have been talking about this, the bull run thesis, or 4th boom cycle, I should say, not the bull run thesis, dating back to roughly November-ish. So it's been a thing with us for a while. But it says, cryptos, like I mentioned, are in the midst of the 4th boom cycle and are following the same trading pattern they followed, listen to this, guys, during the 1st, 2nd, and 3rd boom cycles, wherein Bitcoin bottomed 12 to 6 months before halving event after losing 80% of its value in a bear market crash. Perfect example, what happened in the 2022 crypto bear market / crypto winter, whatever you want to call it, right? Some people call it crypto apocalypse. I don't know if it was quite that much, but it's definitely a crypto blizzard, to say the least, right? So there was retakes in which you had about half of those losses into the halving event. It says, and then it goes on to make new highs in the 12 to 16 months after the halving event. What's an example of something to look at as far as like an actual chart? Well, here you go. You can see some of what happened back in like 2022. Like it says, the crash 24 months before halving. Oh, that's the rebound 12 months before halving, and then the melt up 12 months after a halving. Now you got to keep in mind, a lot of people are focusing on this whole talk of the halving. I mean, there's a lot of focus obviously right now with PayPay, and rightfully so. And I don't think there's anything wrong with that. I mean, I'm shout to all you guys that took advantage of that. I personally didn't take advantage of that. That's just me. But some of you guys mentioned that you're not holding on to it long term, and you're doing a form of a power, not necessarily a power swap, but like a swap for opportunity. I call it power swaps depending on your position. But for me personally, this whole concept of holding on to a particular meme token, diamond handing it long term. You hear a particular influencer say, I haven't sold a single token. We've learned from that, right? Basically in the past, especially if you've been in this crypto game for, I would say, at least 2 years or more, right? You probably have learned some things as part of this crypto journey, right? So there's what's going on with that. I want to show you guys this. It says improving financial market sentiment driven by falling inflation, falling treasury yields, a dovish evolution in Fed policy, and restabilizing economic activity will provide strong macroeconomic ammunition for this rally, basically late 2023, 2024, and for a lot of people, they feel as though, boom, all-time high should be 2025. We're going to see, right? Absolutely. It says, meanwhile, the recent banking crisis will provide further ammunition for this rally by elevating Bitcoin's position as a respectable store of value. There's a difference, of course, like we mentioned on the show, when it comes to a store of value and when it comes to something that's going to be used for cross-border payments. Obviously, BTC will not be used for that lightning fast, cross-border payments, right? Could it be, for instance, as Cool Cat has mentioned, and I'm into as well, BSV, right? Through the Bitcoin Association, could very well be, right? And we've been taking more of our deeper dives into that. It's been very impressive. But that would be used for like something impressive, like high transactions and, cross-border payments and things like that. Ripple's XRP, XLM, you name it, right? Obviously, we talk about quant, how they're tied into all that particular stuff. But at the end of the day, none of the central banks are talking about BTC for cross-border payments. So with that said, it says, for instance, again, I'll reiterate this, this provides further ammunition for the rally by elevating Bitcoin's position as a respectable store of value. For more clarity on regulation, the European Union just passed the world's first comprehensive package of rules aimed at regulation in the crypto industry. And we cover this, right? And we feel, especially like with MICA, right? MICA. And that is a big step forward for, in my opinion, getting things rolling here for blast off, right? What do I mean by blast off? Well, I'm going to show you this other particular, thing right here. And I've talked about this numerous times, the 4 phases of the crypto market. I believe that what we saw from the last crypto winter was the part of that markdown. This phase that we're in is accumulation. I do not want to accumulate all of this, the goals I have for crypto during a markup. Markup is part of, obviously, blast off. Now, you got to keep in mind, going into markup, could it be later on in 2023/2024? Very well could be. Could all-time highs be part of that markup in 2025? Yeah, could very well be. But I also don't want to time this the wrong way during distribution. You got to keep in mind, after we get that clarity, yeah, there could be a distribution point and so on. But at the same time, what ones are focused in regards to like a utility run? And with the utility run, understand this, that these things that are presented here are based on the current market cycles and so on. So there's a lot of different factors to take into place when it comes to this whole talk of all of this, right? Current market conditions, and where we're going here in the future here soon, right? And I'm going to jump back to what we have in regards to this outline. So, it states that, the EU, of course, passed that the world's first comprehensive package of rules and so on. We just talked about that. Should also support higher confidence, by extension, higher prices in the crypto market. And even today, we'll jump to this part real quick. You did see what's going on with this. Some people feel as though, well, it looks nice today, Max. It could fluctuate tomorrow or the weekend or by the time we hit Monday. Absolutely. But what's one thing that we know that recently happened, right? It's this. And that is, the Fed raising basis points to 25 basis points. Like it says right here, the U.S. Central Bank lifted its benchmark overnight interest rate to the 5.25% range, its 10th consecutive increase since March 2022, and dropped language in its policy statement saying the Federal Open Market Committee still, quote, anticipates that some additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficient restrictive to return inflation to 2% over time, replacing it with a more qualified statement. Now, when we jump back to this, I want you guys to see this. And, at the end of the day, like it says, that picture or big picture, bull thesis remains alive and well. And that's why I wanted to get with you guys tonight in regards to this and share some of this particular information. Because the way I look at it is alive and well. Sometimes at the end of the day, it's not about being always right, but it's about being right during the right times. And I'm not trying to, of course, toot my own horn here, but I also understand that sometimes it's not a popular thing to do, to come on camera and say, hey, you know what, guys, I think we're in a, the very, very start, the infancy, or the inception of a bull run, when the rest of the narrative based off of popular opinion is that we're not, right? And, this has been a thing that we've been doing for a while. So it says, therefore, the current dip in cryptos is a buying opportunity. And of course, we saw it fluctuate. There's still ones where you still have those entry points. Here's a perfect example of what I'm talking about when it comes to just that. And if anything, I'll pull up my watch list. So here is my particular watch list. And, you got to pay attention to what's going on, obviously, on the 7-day chart, 24-hour chart. I do that on everything, right? So on this, I look at things like, what ones do we have pullbacks on? Leo X, that was a big pullback. Why was that such a big pullback? Understand that this was over 60 cents, I think, at one particular point. I know there's some bad ones on this list, but I also look at, for instance, one that we recently covered, DMTR. That one's an opportunity. How's an opportunity? It's original. The tokenization of what? Agriculture, farming, and so on. There's something to be said about that. There's some other ones. VAIOT. I believe it was, Mass Debater. He was talking about this particular one, and that seemed like a pretty impressive one to get into. Now, none of this is financial advice, obviously, but I'm always looking at the ones in which, just because you see certain miniature pumps and so on, we have to pay attention to what the heck is going on with this. Obviously, BTC Pay is the one I got my eyes on, right, for another power swap. But whether it's me, whether it's the next guy, there are ones in which will be the opportunities to take advantage on what is referred to as the dip. Relio, here's another example. This was up, I think, over 40 cents at one particular point, right? We've been covering it since 8 cents. Shout out to Mike Cornwell, who got into this at 8 cents, right? So my thing is this, that is an opportunity for a dip, right? I'm not saying for you to get into any of this. I'm just a messenger, a guy who provides news, updates, and research. How about this? Cypherium. I've made it clear to you guys that I feel as though if this crashes below, like a penny or below, I will buy one more bag. It may seem like a crazy thing to do. Why would I do that? I'm looking at it from the perspective of, if it did very well crash, especially before like June, July-ish, when FedNow comes out. What is it? July? I can't remember. But that's soon. That's one in which, we could be wrong about. I'm just saying. I'm not endorsing it for sure. There's lots of opportunity. I still think helium is a great opportunity. Are you kidding? Bone, Shiba Swap. Maybe Max finally just buys an official bag instead of going off my rewards from the liquidity pool I provided a while back, right? But whatever the case be, these are particular examples in regards to a reaction to take advantage of the dips, in regards to like what you see with this bull run thesis. Now, let's get into a little bit more in regards to this. It says, timing when buying dips is important, and we think the timing looks pretty good to start dip buying efforts at current levels. That's why I gave you that particular example that you saw on the watch list. It says, technically, Bitcoin has formed a solid uptrend channel ever since its big breakout in January. I was talking about some of this stuff back in January when it was a very unpopular thing to do so. The top side of this channel is very clearly defined. The bottom side of this channel, though, it is not well defined. We believe there are 3 bottom side channels to monitor, providing 3 different lines of technical defense for BTC in pullbacks. Now, you may be wondering, like, what the heck is that? And what is that all about? And should I pay attention to some of these things? You better believe we should all pay attention to these things. At the end of the day, I want to state this to each and every one of you who are tuned in right now. We should pay attention to some of this stuff. So again, if you are basing, I'm not saying you guys here who are watching, but there are people who do this. You base things off of a narrative because of what sounds popular based off of people in, other channels, or what you heard on a recorded video or a live show and so on. There's narratives and then there's numbers, right? So it says the top side of this channel is very clearly defined. The bottom side of this channel, though, like I already mentioned this, says we believe there is 3 bottom side channels to monitor, providing 3 different lines of technical defense for the BTC and pullbacks. We already broke the first line of defense. How so? We're going to show you that here in a second. We are now between the first and second lines of defense. The third line of defense is significantly lower. Given current fundamental conditions, we think it is somewhat likely that Bitcoin bottoms in between its first and second lines of defense. We do not believe it will break the second line of defense and test the third line of defense. So what is this all about? Well, like it says, we are currently in between those first and second lines of defense, and consequently, we think BTC, as in Bitcoin, is in a short-term buy zone. Here's a representation of that, and where we're basically at from late January to where we're at currently speaking now. Okay, and people have taken advantage of this and so on. I'll just leave that up there for a second. So, how do we know that people have taken advantage of some of these things? And that's a great question. And what I would basically do is show you some of this right now. Here's an example of that. So currently speaking at Bitcoin, there's a lot of volume that's up, 16.81% up. How much in volume exactly? Well, about $18.5 billion on the 24-hour chart in itself. I mean, this in itself, don't be surprised if you did see it go back up to over 30K again. But as far as all this, what about, Max, you said the whole thing of, Bitcoin 180K, right? I could be wrong, but I am basing on a lot of the particular data. I want to show you a little bit more in regards to this. So before I do so, I want to jump back to this real quick. And it says, looking farther ahead, the question becomes, how high can cryptos rally in this boom cycle? At the end of the day, that's probably why you are connected watching this particular program. While I understand there's some degen talk, and rightfully so, that's okay. You guys are having a good, fun time. Understand this. Like it says, we saw one analysis this week, which provides a pretty strong argument for why Bitcoin can rally. Yeah, you saw it right. To $180,000 in this cycle. Now, you got to keep in mind, in the last particular cycle, where you had a lot of FOMO money coming in, Bitcoin on 11/11/2021 hit 69K. Also hit roughly, 4,500-ish, maybe possibly more. I don't have that number memorized. But for Ethereum, why is that so important to know those particular things? Because even now, to this day, until we get to the true utility run, Bitcoin and Ethereum represent roughly 80 to 81% of the overall crypto market. Now, we cover things like JASMY, and we understand what's significant about that is that on the 90-day chart, the 60-day chart, the 30-day chart, the 14-day chart, 7-day chart, even 24-hour chart, and even 1-hour chart shows that JASMY does move, for instance, in correlation to both Bitcoin and Ethereum. Now, people have some, theories in regards to that because, for instance, how the contracts is set up. And we understand that, there is a, Binance Smart Chain Bridge, but that is something to pay attention to. If we get $100,000 Bitcoin, I'm not even going to say 180,000 Bitcoin, you better believe that with these particular prices, for instance, with JASMY, that is going to be huge, right? So I'm not saying for anybody to go out and buy Bitcoin. I think obviously there's other opportunities when it comes to having a better return on your investment. But if you are in the position where you're, let's say, you're a multimillionaire and you already made it, well, obviously, if you bought during the time of FTX when that happened and when Bitcoin, BTC, that is, dropped to 15,800, 900 in that particular range, but the 15s, that was the true bottom. So the analysis rests on the idea of incorporating Bitcoin into the traditional 60-40 stock bond portfolio. How so? Well, like it mentions, the traditional gold standard for investment portfolios, it is supposed to perfectly balance the risk and reward and give investors an all-weather portfolio to outperform in the long term. How so? Well, like it shows, the 60-40 portfolio was crushed and both bonds and stocks lost significant value. This has led many to think that adjustments need to be made to the 60-40 portfolio. One popularly proposed adjustment is throwing Bitcoin into the mix because BTC is relatively volatile, or its volatility, excuse me, has dropped over the past several years while its excess returns remain remarkable. So again, there's one thing of what you heard in the past, and then there's what there really is. It says, we see a chance for the traditional 60-40 portfolio to turn into a 60-39-1 portfolio with a 1% debt reallocation to Bitcoin. And here's where the juicy stuff comes in. Listen to this. There is 300 trillion in global debt holdings. We focus on this so much. Why? Well, for the same reason that we focus on researching Ripple's XRP. We understand that at some particular point, when it comes to the central banks of the world and so on, you better believe that Ripple is an answer to this whole thing of banks failing across the world and so on. If we have a monumental collapse and whatnot, well, that creates supply and demand for particular distributed ledger technologies. Ripple's XRP happens to be the answer to, for instance, Nostra Vostro, you name it, with Ripple's on-demand liquidity. If Ripple takes on the debt of all this, well, then you can draw a conclusion to, hey, you know what? Maybe that's part of the big utility run. And with that also said, Stellar is part of that mix. So this statement right here, 300 trillion global debt holdings. Listen to this. Again, the juicy stuff. If 1% of those holdings shifted into Bitcoin, which I believe it very well could, because that's lowballing it, just 1%. That would inject, listen to this, guys, $3 trillion of buying power into Bitcoin, which would push the price up to, we mentioned 180,000. How about $185,000 per coin? So this is what I'm talking about. There's one thing about one narrative of, oh, I heard this, these guys, they said that, there's a bet in 90 days, Bitcoin could go to $1 million. Okay. Is there any data to back that up? Here's some actual data based on even lowballing at 1% that backs that up. And what do we also back it up with? We back it up with some actual charts to show you what the heck has happened in the past, to give you an idea of where we're at in the now and where we're going here in the future. Based on different debt reallocation scenarios, listen to this, guys. Are we not paying attention to this? Listen to this. This is the good stuff. Based on different debt reallocation scenarios of 1% to 2.5% with U.S. debt, sovereign debt, and global debt, the potential price impact to Bitcoin ranges from, listen to this, a jump to 45,000 to 420,000. Now it's getting a little ridiculous. Max is starting to lose his mind. No, but look at the chart. Look what it says right here. Bitcoin price based on debt reallocation scenarios. How do we know this? Based on debt class, total global debt, market value, 300 trillion, 1% shift to BTC, 3 trillion, BTC price, boom, 184,961. They just rounded off to 185. Potential return, 517%. Even if you're not a person, and I know that I'm not really into the comments right now, but my thing is I will be. All right. I love you guys, especially, your ongoing support. But when I saw some of this stuff, I said to myself, it is time to update the bull run thesis. This is massive stuff. So even if you're not a person who is on the same page of, me or other people, when it comes to, I don't understand the whole thing of a utility run and so on. The only thing I'm concerned about is what Bitcoin is doing. You know what? That's okay. Want to know why that's okay? Here's proof of why that's okay. Why? Because we have some particular assets like JASMY and a few other ones that we have to pay attention what happens still with the current market conditions, because these current market conditions, and based off the data, that is significantly impressive. My goodness. And I will state this, right? This whole thing with PayPay, right? That still brings in a lot of, contributes over to the global market cap. It's a win for crypto in general. There's some debate of, it could be bad. I do agree it could be bad, especially if, there's a big sale, flash sale when it comes to that, right? But how about this next particular example? What is the total sovereign debt? Well, 72 trillion. What if there's a 1% shift to Bitcoin? I mean, it's not like we're saying it's a 10% shift, We're saying 1% shift to Bitcoin. And you may be thinking, I'm not on board on some of this stuff. Well, keep in mind this. When we saw stocks plunge recently, in previous years, as stocks plunged, crypto usually plunges with that. But with this whole talk of what's happened with the bank collapses and so on, we saw a little taste for the first time that, finally, crypto separated itself from that particular thesis or norm that we're going to go to hell in a handbasket with it. So again, like it says, 1% shift to BTC, that's 0.72 trillion. That's still a lot. BTC price, even at those figures, 67,099. That's 2,000 below our previous all-time highs on 11/11/2021 for Bitcoin. Potential return 124% compared to where we're currently at now. That's still not too shabby. All right, just to pound it home a little bit more. How about total U.S. government debt? It says 31 trillion. It's about 31 to 32 trillion. And we report on this many times as well. 1% shift to BTC, 0.31 trillion. BTC price, roughly about 46,000. That's still a 53% return. Again, what digital assets do you have that reflect what you see based off the chart? JASMY happens to be a great example of that. There's other ones, obviously, too. How about the debt class? Total global debt, 300 trillion. Again, like you see, how about this? Let's increase it a little bit. We lowballed it earlier. Let's increase it a bit. 2.5% shift to BTC, 7.50 trillion. And my God, this is where you're going to see a narrative on even television. Because you know what television does? They give you two narratives, only two. They'll never tell you about the use cases of certain, cryptos that are tied into the financial system or, their use cases or what utility they have. Nope, never do that. Only report on two narratives, their narrative. And that is basically this. Bitcoin has crashed. Oh, that's all going to zero. Oh, get out of it completely. Get out of crypto. It's just a big scam, right? And what's the other narrative, guys? When you see this thing pop up to 7.50 trillion or more, especially in a utility run, are you kidding? This thing's going to be smashed out of the park, right? 10 trillion, maybe 100 trillion. I know it sounds nuts. Maybe it'll look like a cuckoo bird or whatever. But the key thing is this. Doesn't mean it can't happen. And there's enough data to show that it could very well happen. Well, I'm new to crypto. You sound crazy, Max. Okay, that's all right. I could take the heat. But I do know this. Once we get regulatory clarity and all these institutional money come in, BlackRocks of the world, you name it, oh my goodness. Oh my goodness. Because that is the biggest wave of representation of some of these examples that you see right now, but added into those equations as well. That doesn't even include some of that stuff. Are we not paying attention to what's going on here? I hope we are. A little bit more of what is going on with this. So 2.5% shift to BTC off a total global debt. BTC price 417,584. It's a potential return of 1,292%. How about this? Total sovereign debt. Total sovereign debt. Have you been paying attention to that? Yeah, I'm sure some of you guys have been. 72 trillion. 2.5% shift to BTC, 1.80 trillion. Not too bad. BTC price 122,928, 310%. Potential return. You get how some of this stuff is. I might get more into it. I want to give you this next particular example. It says, of course, these are just arbitrary numbers, right? You got to keep in mind, look at some of the sources, Bloomberg, Intelligence, and so on. It says, they believe that current dynamics imply that we will get some debt reallocation to cryptos in the coming quarters. The size of the reallocation is unknown, but any reallocation at all will provide upside firepower for what? The boom cycle. Why do I put so much emphasis sometimes when it comes to these boom cycles? Because at the end of the day, I was just like the next guy. I came from, a time of early 2021 where I killed it in crypto. I was like, oh my God, $300 into Dogecoin, and then it became 22K. And I was like, oh my God, I'm not going to listen to everybody out there about saying that. I heard people saying that, don't sell your Dogecoin. It's going to go to $10. I was like, to hell with that narrative. I'm going to take some freaking profits. At the end of the day, last I saw, even in stocks, you need to do something like that, right? Thank God I listened to my gut when it came to that. Then I said to myself, well, I did well with, Dogecoin. Came into it early at 1 penny. What else can I buy for a penny? Well, enter in, for instance, Shiba Inu. And then I could find out that I could buy not even just for a penny, but I could buy way low below a penny. Decide to load up the freaking truck on that. Bought in at 50799, and bought over $1 billion of those. I think it was like 1,100,000,000 or something like that, right? But the point was that did an 11x for me. And yeah, you better believe I took my profits on that one too. Chronos, $1,700 in, came out a little over 10,000 on that. As you guys know, the story, 10K became 120K. Now you guys are doing pretty well with some of the stuff on PayPay and so on, and that's awesome. Shout out to you in regards to that. All I'm saying is this: please do not diamond hand the thing. I mean, I'm not saying have paper hands. Don't have paper hands, obviously, but do not diamond hand the heck out of anything for the most part, unless it's something you feel as though it's like, I mentioned quant, XRP, and stuff like that. There are some exceptions to the rule. All right. So it says, for instance, overall, despite the bumpy week for cryptos the last week or so, I mean, it's kind of been up and down, we remain bullish and view this week's sell-off as a great buying opportunity. I mean, you got to believe it. You better believe it. It is a great buying opportunity. So, I wanted to share that with you guys. I thought it was massive. And, we do these things here. Sometimes we share this type of information with the community because, let's face it, you got to pay attention to what the heck is going on. I think there's some real significant things on the horizon for all of this. Am I buying a full Bitcoin? No. I really put that into some of these altcoins that have solid utility.
Thank you so much for watching, guys. If you have not yet subscribed, do yourself a favor and subscribe for more information on the ISO 222 compliant tokens, and hit the notification bell to make sure that you are aware of the new videos when they come up. Max and I cover these ISOs, and we also have a live show every single night at 9 p.m. Eastern Standard Time. Make sure you tune in for that. You won't want to miss it. Thanks again, and we will see you on the next video.